Hello, and welcome to Let's Chat Mining and Metals IFRS, or International Financial Reporting Standards. This podcast is the first in a series that explores what is top of mind for mining and metals entities, their CFOs and finance functions from a business perspective, and the flow on financial accounting and reporting considerations. The aim of these podcasts is to highlight topical business issues that may impact your financial and non-financial reporting and broader business. I am Claire Patra, a senior manager from Ernst & Young Australia, based in Sydney, and I'll be leading the chat today. I have over 16 years of experience in providing assurance and IFRS services across a broad range of industries, with a particular focus on extractives and mining and metals. From time to time, I will invite guests to share their perspectives on the issues we are discussing, as this will provide additional insights that may be useful as you consider the implications for your business or your clients in the sector. So look, what is top of mind in the sector at the moment? And we'll frame our discussion today. Well, annually, EY teams interview global mining and metals executives to identify the year's top risks and opportunities. And the most recent report was issued in October of last year, so 2021. And over 200 global mining and metals executives were surveyed to provide their views on the challenges and opportunities for the year ahead. And so, as you can see on the slide, for the first time, these respondents ranked environment and social issues as their number one risk. Decarbonization was a major disruptor, coming in second, and in third place was license to operate, which had been in the number one position for the past 3 years, but fell to third place. I don't think it's a surprise given the increasing level of investor, regulator, and community focus on environment, social, and governance, or ESG-related issues. There were also two new risks and opportunities that ranked in the top 10, being uncertain demand and new business models. Given the importance of these issues, our first few podcasts will focus on these top 10 business risks and opportunities, and we'll look to explore the potential related implications for financial accounting and reporting, including the flow-on impacts to the financial statements. Given the level of focus, we're going to start with the number one ranked risk and opportunity, which, as I mentioned, and you can see on the slide, being environment and social. And to chat about this further, I'm joined by Tracy Waring, who is the EY Global Mining and Metals IFRS leader and partner in our financial accounting and advisory services practice, based in Melbourne, Australia. She has nearly 30 years of experience in providing financial accounting, advisory, and assurance services to a wide range of clients in Australia and globally. She has extensive experience in and a focus on the extractive industries, covering mining and metals and historically oil and gas. Welcome, Tracy, and thanks for joining me today.
Thanks, Claire. It's great to be here.
Also, just for a little bit of fun, as part of these podcasts, we're going to spotlight a mineral and metal that may or may not be related to the topic at hand. And this month, really what has grabbed my attention is manganese, because it is related to ESG, especially the environment. So I wanted to spotlight manganese today. So some facts, look, it's a key ingredient in some of the most commercially suitable batteries, and with the coming boom in battery demand, a range of previously obscure minerals are now in the spotlight, like manganese. There's plenty of it, it's inexpensive. And what is interesting to me about manganese is that some car companies have committed to using batteries with a higher manganese content, no cobalt, and reduced nickel. So with that, I hope you can grab a coffee, put up your feet, go for a walk or run, and enjoy the Let's Chat Mining and Metals podcast. So I mentioned the top business risk and opportunity from EY team's latest survey was environment and social. And ESG may feel like a buzz phrase at the moment, but I think it's fair to say it's not a sideline issue anymore. It's clearly a focus of a wide range of stakeholders.
Yeah, you're right, Claire. It is actually a very broad topic with many facets that can impact the accounting and financial reporting for our entities. And I guess one of the key questions that entities will need to consider is, do you know or are you clear what ESG measures are important for your stakeholders? Now, not only is this a question mining companies should be considering, but it's also one of the questions that was considered when the proposed IFRS sustainability disclosure standards were being developed. So, in this chat, under the theme of environment and social, we're going to touch on two aspects of this. The first one is what are the proposed sustainability disclosure standards, and also explore some of the current accounting requirements that might be useful for people to think about as well.
And to make sure we're on the same page, Tracy, what are the proposed reporting standards?
Well, there are a new set of global disclosure standards relating to sustainability. These new IFRS sustainability disclosure standards will be under the remit of the International Sustainability Standards Board, or the ISSB. Claire, maybe can you give us a bit of background on the ISSB and tell us a bit about more why it was set up?
Yeah, sure, Tracy. I mean, the ISSB was set up by the trustees of the IFRS Foundation, and it will run in parallel to the IFRS Foundation's International Accounting Standards Board, or IASB. The ISSB was set up in response to the demand for, it's really for comparable, relevant ESG information, which is seen as a barrier in the transition to a more sustainable economy. And while many stakeholders have an interest in ESG, the clear message expressed by users is that there is an urgent need to improve the global consistency and comparability of sustainability related reporting. And the focus of these proposed standards is being driven by the information needs of investors. So, coinciding with the announcement of the formation of the ISSB at COP26, or the UN Climate Change Conference, in November of last year, 2021, two prototype sustainability disclosure standards were released by the ISSB, really to provide the public with an indication of what the new sustainability disclosure standards might look like. And so, using the two prototypes as a basis, at the end of March of this year, 2022, the ISSB published two exposure drafts on IFRS sustainability disclosure standards. So, the first one being general requirements for disclosure of sustainability related financial information, and the second one being climate related disclosures. These exposure drafts have a 120-day comment period, and the deadline for comments is the 29th of July of this year, 2022. So just around the corner, Tracy.
So, Claire, do the exposure drafts have an effective date yet?
Well, no, they don't currently, but an effective date will be set by the ISSB, and the ISSB will allow entities to apply the standards before that effective date. It's going to be up to local jurisdictions, though, to determine whether it will be mandatory for entities within their remit to report on the IFRS sustainability disclosure standards.
But Claire, I guess what we're seeing though with the pace at which jurisdictions are responding to climate is incredibly fast, and many jurisdictions have actually mandated or are proposing to mandate these climate-related disclosures. Is that right?
Yeah, that's right, Tracy. And of note, recently the SEC has proposed rule amendments that would require a domestic or a foreign registrant to include certain climate-related information in the registration statements and periodic reports.
So, Claire, you talked about the fact that the ISSB issued some prototype standards. Has there been many changes from those prototypes to the exposure drafts that have been issued?
Yeah, there have been changes. Some changes are substantive and some less so. But for those that are interested, there is a comparison document published on the IASB's website if people want to delve into that a bit deeper.
So then what do the standards focus on?
Yeah, the proposed standards focus initially on climate considerations, so not surprising, really aimed at establishing a global baseline for standards. So with the intention, though, to build on existing frameworks.
And what are some of those frameworks that it's been based on?
Yeah, so there are a number of existing frameworks worldwide. So the foundation intends to leverage on the work already done by some of the other organizations. And those would include, Tracy, the Task Force for Climate-Related Financial Disclosures, or what people refer to as the TCFD, the SASB, or the Sustainability Accounting Standards Board, the International Integrated Reporting Council, and also the Climate Disclosure Standards Board, or CDSB.
Okay, that's super interesting. So can you tell us a bit more about the standards and what they're proposing?
Yeah, so as I mentioned, so one relates to climate-related disclosures. So it really applies to climate-related risks that an entity is exposed to, and includes physical risks from climate change and risks associated with the transition to a lower carbon economy and climate-related opportunities that are available to an entity. The other one relates to general requirements for disclosure of sustainability-related financial information and includes the requirements relevant to the sustainability-related risks and opportunities that an entity is facing. And so to be clear, applying the ISSB standards means disclosing information about all material ESG impacts, so not just those on climate. And the proposed standards follow a structure that is based on the 4 TCFD content pillars, of which many of you will know are, governance, strategy, risk management, and metrics and targets. And it also does contain industry-specific requirements, which we will chat about shortly because it will be of an interest to listeners.
So Claire, a question that I often get around sustainability-related information is, where do we need to disclose that? Is it in the management commentary, the financial statements, somewhere else?
Yeah, that's a good question. And yes, I'm getting that a lot too. And look, at this stage, subject to individual jurisdictional requirements, there is no mandatory location for this information. I mean, it could be disclosed in either or even a separate report that is cross-referenced to the information, but it needs to be available at the same time and on the same terms as the financial statements. So for example, just as accessible as the financial statements by publishing it on the entity's website. And remember, disclosing information in the financial statements, though, does mean that that information is subject to audit. It's important to note, too, that applying the IASB standards and applying the ISSB standards aren't linked. So what I mean by that is, an entity can apply the IFRS accounting standards without applying the proposed ISSB disclosure standards and vice versa. So given our discussion on the new ISSB and exposure drafts, Tracy, what does this mean for mining and metals entities?
So perhaps if we focus firstly on the climate-related disclosure standard, and in particular the metrics and target disclosures. So these metrics and targets need to be disclosed from both a cross-industry perspective and also an industry-specific perspective. And the disclosures need to be made showing progress towards the targets that an entity has set to mitigate or to adapt to climate-related risks or to maximise the climate-related opportunities. So in particular of relevance would be some of the specific industry-based disclosures for mining and metals entities would include greenhouse gas emissions. So for example, your gross global scope 1 emissions, your emission reduction targets, and an analysis of your performance against those targets. Another one is energy management. So your total energy consumed, the amount of that percentage coming from the grid versus the amount coming from renewable sources. Very topical for mining and metals companies would be water management, which is your total freshwater withdrawals, total freshwater consumed, your percentage in each region with high or extremely high baseline water stress. And then finally, production of metal ores and finished metal products and total number of employees and percentage of contractors. Now, look, these are just a handful of the required disclosures, and we've pointed out some of the industry-specific requirements, but we would encourage our listeners today to review the full set of exposure drafts to understand all the disclosures that might be relevant to them.
Thanks, Tracy. That's really interesting. I mean, we focused on the exposure drafts issued by the ISSB, but these aren't accounting standards. So currently, what do the accounting standards require?
That's right, Claire, and it is really important to understand that the ISSB are not accounting standards, and currently under IFRS, we don't have an explicit standard or any requirements that focus solely on climate-related matters. However, as you would be aware, under current IFRS accounting standards, climate risk may impact a number of different areas of your accounting and your financial statements. So for example, determining the effects of climate change and transition to a low carbon economy on your financials can require significant judgment. And also what we're seeing is explaining the linkage between your sustainability and climate related disclosures that might be made elsewhere compared to what is or is not disclosed in your financial statements will become increasingly important. And it's important to understand they are similar, but they're not the same.
Yeah, I mean, there are many different areas of the financial statements that might be affected. And perhaps, Tracy, you could discuss a few of those.
Sure. One aspect that is around accounting assumptions, estimates and judgments required by IAS 1. What I'm actually seeing is some entities in the sector are doing a really good job of disclosing their transition to a low carbon economy. And they do this by disclosing their low carbon energy transition scenarios and the management assumptions regarding the impact of that transition. They also disclose the items in the financial statements that have been affected by those scenarios, for example, closure or rehabilitation provisions. I'm also seeing some entities disclose sensitivities around transition risks, for example, commodity price outlooks. Secondly, climate-related matters may also affect the recoverable amount of property, plant and equipment, its economic life and residual values. So, for example, climate change and the associated legislation may increase the chance that for some items of property, plant and equipment that they could become stranded assets, which could then mean that the useful life of this mining equipment could become shorter than previously expected. This could result in earlier decommissioning, and if so, would increase the decommissioning provision and the associated decommissioning component of the asset due to the discounting effect. So an entity would need to consider whether such events and circumstances indicate impairment. And as you would also expect, a shorter useful life would also increase the depreciation charge in your financial statements going forward.
Yeah, I've been seeing more and more entities enhance their climate disclosures recently, but look, I think there's still a long way to go.
And I'd agree, Claire. It's very much an evolving process as companies refine their climate and ESG strategies, which will impact an entity's assets, liabilities, and their financial statements. And as you said, there is still a long way to go and there's still a lot of unknowns, but certainly it's very, very clear that the expectations of key stakeholders has increased significantly in this area.
Yeah, I definitely agree. And look, that's all we have time for today. But Tracy, you posed an important question at the start to our listeners around, do you know what ESG measures are important to your stakeholders? And I think this answer will form an important part of an entity's journey around environment and social and the impacts on the financial statements and broader reporting. So we trust this discussion on environment, social, and in particular, the ISSB exposure drafts and current accounting requirements related to climate confirmed or helped you clarify that if you haven't already, it's definitely time to think about and, re-challenge yourselves as to whether you're gathering this information and the information that's proposed in the exposure draft. It will also be important to assess whether there will be any other flow-on implications to systems and processes. So as you can see on this slide, these are additional resources if you're wanting more information on some of these topics. So there's some, for example, relating to sustainability developments publication. There's also one relating to a webcast on why sustainability could be the next frontier in reporting. And then if you're wanting more information on the exposure drafts, you can go to the IFRS Foundation's website and there's some education material as well. So thanks for joining us today. And Tracy, thanks so much to participate as well and have a chat with me around this important topic. It was really great to have your insights.
Thanks, Claire. It was great to be here.
We look forward to speaking to you all on the next episode in the Let's Chat Mining and Metals IFRS series.